Hey guys, and welcome back to the ASX Investor channel, and welcome to another CEO interview. This is one many of you have been requesting over the past period. We all know about the exciting fintech space, and we know that there's so many different companies in there really trying to carve out their piece of the pie, and Wisr is one of them. They're a neo lender that have aspirations to become Australia's largest non-bank lender. They had a really significant period of growth throughout FY21. There's a lot of numbers for us to unpack, and there's a lot of different announcements as we think about the pathway moving forward. Today, we're very excited to be joined by the CEO, Anthony Nantes. We're going to be unpacking everything that's happened in the ASX WZR story. Anthony, welcome to the channel.
Thanks, buddy. It's great to be here finally.
It is an absolute pleasure to have you. There's so much for us to discuss, but I'd love just to give you that platform for the initial question. Who is Wisr and what is that problem that you're trying to solve?
Yeah, great. So Wisr is a purpose-led consumer finance company. And it's a company that's been around for now 6-7 years. Really focusing on the consumer finance landscape and ultimately really trying to change the dynamic of what it means for someone to access credit. Right? The average person to access credit is super important. You know, it's actually the access to credit is one of the things that separates the first world from the third world in many regards. Right? In the first world, we take it for granted. You can access credit when you need it. Right? And it's something in lots of other places in the world that you can't. But ultimately, for the vast majority of people, accessing credit's a really, really negative experience for a whole range of reasons. Everything's weighted in favor of the lender, right? Hidden fees, hidden charges, hidden contracts. They write the contracts. And ultimately, what we've seen through banking royal commissions is they never have the best interests of their consumers at heart. What we've done from day one is build a purpose-led company genuinely focused on the financial wellness of our customers. So that when we offer them credit, and that credit is typically significantly cheaper than what they get access to from, say, a big four bank, that we charge no monthly fees, no hidden or ongoing fees, no early repayment fees. And in fact, we actually encourage our customers to try and pay off their loans faster and provide apps, tools, and services in order to do that. So what that's meant is we've built two platforms at once. We've built a really great digital lending platform where people can access credit, access personal loans at a really great, fair rate, and do that with a really amazing digital experience. But alongside that, we've also built a financial wellness platform, which has a whole range of features, tools, and products to actually go on the journey with someone when they access credit. And ultimately, that makes us very, very different to most lenders in this space.
There was plenty for us to dive deep into with that answer, so I'm looking forward to it. But I guess you answered it in a few different pieces, but just to help to distill it for the viewers, what is that special sauce that really sets Wisr apart? We know the fintech space is crowded. There's a lot of different players in it. What is it that sets you apart?
Oh, look, I think there's a few things. First of all, being a purpose-led lender, there's a lot of people who are following suit these days, but we like to say we were the pioneers in building a purpose-led company in consumer finance. And what that meant is we've built our entire business model around getting better outcomes for our customers, really focusing on their financial wellness, right? If you think about most lenders, all they care about is the transaction. They just want to win that transaction and lend the money to you. But after they lend the money to you, it's sort of like, good luck, goodbye, right? And before that, they've got nothing to offer you either, right? We're really focused on a very whole of life cycle relationship with our customers where we can provide a whole range of financial wellness tools well before they need access to credit. And then after they access credit, hopefully from us, that we go on the journey with them. Do we actually help them manage that debt? We help them repay that debt. We help them responsibly look after that debt so they don't get themselves in trouble. And ideally, we help them pay off that debt faster. And not only with our own loans, right? You can use our financial wellness tools to pay off your CBA credit card a little bit faster or pay off your NAB home loan a little bit faster. So we want to help Australians actually manage all their debts and make sure they do that responsibly and don't find themselves getting into trouble.
And under the Wisr banner now, you've got two products. You've got obviously the personal loans up to above $60,000 and now the vehicle loans, which you've added in as well. Can you help to conceptualize it for the viewers? What are these products you have and some of the economics? Can you run us through those, please?
Yeah, so we have two core products. They're both personal loan products, very similar to what you might have seen from a big four bank. So you can borrow the 3, 5, or 7 year terms. Traditionally, if you're going to borrow a personal loan from a big four bank, you might be borrowing at 14%. The other consumer finance product that banks have is a credit card, right? Where you could also borrow sort of $15,000, $20,000. That's typically at 23%. The average interest rate on our personal loan products sits more around about 11.5%, 12%. And you can borrow that over 3, 5, or 7 years and pay that down. The similar for the vehicle finance product, 3, 5, or 7 year loan terms on loans that are On average for us, the average borrowing size is about $30,000 over about 5 years. What's exciting about that is a couple of things. One is when people first borrow from us, on average, they borrow a loan that will take 5 years to pay off, but we actually help them pay it off in 4 years. So we can demonstrate we're actually helping our customers pay off their loans faster. Now that's counterintuitive, right? Because that means we make a little bit less money by helping our customers pay off loans faster. But our belief is by doing the right thing by customers, we're going to build a much, much bigger business over time, and that's starting to play out. The other exciting part about, you think about those two products, if you think about the consumer finance landscape in Australia, it's $120 to $140 billion market size. Right, now, if you think about where Wisr sits today, we've got a $400 million loan book. Right, so we are very much at the very nascent beginning of what we're building. Right, a $400 million loan book sitting in a market size that's 120 billion just tells you just how much growth we've got sitting in front of us to go.
And a really phenomenal figure that came out over this past period, your 20th quarter of consecutive growth for originations. New loan originations for FY21 were up by 169%. I'd love just for you to unpack some of those numbers and some of the trends that you saw throughout the past financial year, and then what investors should look for moving forward as well.
Yeah, look, it is unprecedented, right? To 20 consecutive quarters of growth in our space. And I think we've got a track record that really talks to that. I think the other really important stat that probably you missed out on that is just the revenue growth, right? In the last 24 months, our revenue's gone from 3 million to 7 million to 27 million. You know, it's really starting to hockey stick. And that revenue growth line item is really fundamental to kind of showing just the power of the model that we're building out. In June, we posted our first cash flow positive quarter, which again is a tremendous result for companies, you know, at our size and scale, and well ahead of where most of the market was predicting we would do that. And again, that's just a testament just to how fast our revenue is growing and the track record of delivering quarter on quarter on growth really consistently.
And we know that in the fintech space, one of the big facilitators is debt warehousing and the ability to access capital. You recently expanded your facility to 350 million. Can you talk about what that means for the opportunity moving forward?
Yeah, look, I think the debt warehousing, we were the first in our space in Australia to get a Big Four bank to kind of back us with a debt warehouse, which is kind of true for everything Wisr does. We're typically the first in market in all the things that we do. And I think the more important thing we did this year was actually what's called an ABS deal or a term out deal. So we took $225 million of the loans out of that warehouse and we sold them out to the credit market. And so this is people who spend their job, you know, running a credit fund. This is all they do for a living, is they buy credit assets. And we delivered an unprecedented outcome, right? As an inaugural issuer, we got a AAA rating on our top tranche from Moody's. We got an all-in cost of funds of 1.5% over swap, right? So that's an all-in cost of funds. That's the cost of our debt. Now, if you think about it comparable to a bank, you know, we're not far off the cost of funds that the bank might have, essentially. And you add in all the on costs that it has, that you have to sort of run a bank. We don't have any of those. It's an exceptionally efficiently capital light model with an exceptionally low cost of funds. And one of the reasons why we're able to deliver such a low cost of funds is our whole model, right? One of the things that those who are looking at Wisr when they are assessing how much they should pay to buy, you know, to get access to these assets was the holistic model that we run. Right? No one else does what we do. No one else takes care of the customer on their journey post loan. And actually that makes tangible difference to how these assets perform over time, right? If you're looking after your customer, after you lend to them, it means that they're more likely to repay. And those who can't repay, it means you look after them. It means you can take care of them, right? It means you can find the right way to manage them. And so that all comes down to giving you a really great return. Fundamentally, I think the other thing does it is it just really massively changed our economics, right? It gave us a much bigger sense of economics and revenue that we drive through our business, which is starting to flow through in those revenue numbers that I already talked about.
And opening up broader access to consumer finance is a very broad remit. A lot of it, of course, is underpinned by the general demographics and trends that we'll see throughout society. I'd love for you to unpack some of the trends you've seen, and particularly over the past year and a half. We know that with the lockdowns and everything else that's happened, there's been some big changes. We'd love to hear what you've been seeing out there.
Yeah, you know, there's this notion, right, that the market is efficient, and that's like a prevailing theory, right, that can be challenged all the time. The reality is the market is not efficient. The market is efficient in some regards, but the opportunity, particularly for retail investors or all investors, is to find out where are the pockets where the market isn't efficient. And I would say right now, if you look at the space of digital lenders in Australia, it's clear the market isn't efficient. the market is clearly not valuing companies like Wisr at the rate where they should be valued. There's been a lot of hype around buy now, pay later. We've seen how disruptive that group has been. We've seen how underestimated that group was, right? By the Australian market, by Australian investors, by Australian companies. There can be no greater example of the blinkers that Australian investors and Australian companies had, just completely disregarding how disruptive that space was going to be and how disruptive those players were going to be. Right? And then you have someone like Square come in and pay $39 billion to take out Afterpay, right? In our space, it's similar. We've got a group of digital lenders who the market, right now, I'd say, being completely inefficient in terms of their undervaluing. Right? They don't really understand how disruptive we are as players. We are taking significant market share away from the big four banks. We're doing that at a rate of knots, and the value is not being ascribed to these assets in the way that it should be. Now, I think some of that could just be distraction value. The BNP buy now pay later section has been so, been so in everyone's mind. They've not looked at this next set of who's going to be the next set of real disruptive players. But clearly, if you look at digital lenders, if you look at consumer finance, players like Wisr, who consistently are taking more and more market share quarter on quarter, are really, really disruptive players. And if you look at the overseas dynamics, right, there's a couple markets you can point to. If you look at the US, digital lenders like Wisr now take something like 50% market share of all personal loans in the US, right? It's a huge stat. In Australia today, we're taking as a group, right, digital lenders, maybe like 5 or 6% market share. So there's a huge, delta between those two numbers. And not only that, if you look at the price that others are willing to pay, if you talk about acquisitional value, you've got lots of signs that point out, if you look at the US, the premiums that companies were willing to pay for digital lenders like Wisr, you talk about 30, 40, 50% premiums over their price. It just tells you that the market wasn't efficient. The market wasn't efficiently pricing these companies. We've got a recent example of that here in Australia. Latitude, one of the biggest consumer lenders in Australia, took out a very, very small digital lender, a company that's a fraction of the size of Wisr. It's got a $50 million loan book compared to our $500, $600 million loan book. They were writing $5 to $8 million a month in loans compared to our $50 million. And Latitude paid $200 million for that company to acquire it, right? As an example of just how efficient the market can be sometimes in looking at companies like us and not really understanding just how much strategic value there is in a platform like ours.
And you've spoken about it earlier that you've really hit that magical spot that many of the growth stocks really want to hit, where you're starting to see that real hockey sticking of growth, which is fantastic. And so I guess to really look out for it, what should investors be watching out for over this coming period? What are those key growth drivers that will really speak to Wisr's growth?
Yeah, I think we've got a couple of key things. I mean, first of all, we've built the company around that one core product, which was a personal loan product. That's what we launched with. That's where we've built the vast majority of our growth over the last 5-6 years. We've just launched a vehicle finance product, as you talked about, so being able to help people buy cars. That market is twice as big as the personal loan market. So overnight, we've tripled our TAM, right, our total addressable market, overnight. Now, we've been running that product for a couple of quarters only already. It's already making up about 20% of our loan growth. And if you play that forward and just say, look, Wisr will map the market, right? That market size is twice as big as our personal loan market. That tells you that we should basically triple, right, as a company if we map the market over time. So I think as we go forward and we start to really drive that product out, that will drive really key loan growth for us as well. And then you just have that revenue line just following through, that loan growth, that revenue line that I talked about before. One of the great things about our business is, if you look at our loan book, it's got a 4-year tenure. Now, like I said, 5 years at the start of loan, we help our customers pay off faster, but it still means it's got 4 years of revenue coming towards it, right? That gives us real surety behind the company. And, if you look at where Wisr is positioned today, we've got an incredibly strong balance sheet. We just raised another $55 million, backed by Goldman Sachs, who, by the way, have only ever really raised money for one other fintech in Australia called Afterpay, if you've heard of them. They've now worked with us to raise some money from us and support us in going on our next stage of our journey. So we've got a really strong balance sheet. We've got incredible growth trajectory. We've just launched a new product, opening up a whole new kind of market opportunity for ourselves. So we're really, really strongly positioned. And then on top of that, I think what's really important is in this space of consumer finance, I think one of the things that Wisr does that is really unique is have a very distinct tone of voice. You know, the Wisr digital experience, if you haven't gone to wisr.com.au and seen our digital experience, go and compare that to any other finance company. It's uniquely different. But the way we talk to our customers around financial wellness, you know, that uniqueness in our tone of voice is what separates us in this space, and is what is going to help us win customers more and more as we get bigger and bigger.
It's a compelling offering, and you've got that real holistic lens that you're viewing the entire market as well. For those investors who have been followers of the ASX WZR story all the way through for the longer term, maybe those who are now prospective investors looking into the Wisr story now, did you have any final reflections that you wanted to leave with them?
Look, I think, you know, we've spent 5-6 years getting the company to where it is today, right? And what I'd say is we've gotten to a point where we finally put the key in ignition. You know, the foundations are there, right? We've got an exceptionally strong balance sheet. We've got this big revenue hockey stick coming up behind us. We've got a great track record of delivering quarter-on-quarter growth and entering new markets. You know, everything is set up in place for us to go and build a company well in excess of where we are today. That's a real, real impact size and has a real impact on the community in which we work and live. You know, I think it's going to be exciting as we get to turn that key and put it into first gear, which I think we're about to do. And once we're in first gear, then we get to accelerate, right? And that's super exciting. So, you know, it's very much the beginning of the journey for us. You know, I know we've delivered exceptional growth today, but really, if you think about the market size and the scale of the opportunity that we're sitting in front of, you know, we're still at a fraction of it, right? So the real exciting part of our journey is the next few years ahead of us. It's up to us now to keep executing like we have been. And if we can keep doing that, it's going to be a great story, not just for those in Wisr, not just for those shareholders, but also for the community in which we work, right? Making an impact on having people have a really positive experience when they access credit is really important to us. And so if we can get all that right, it can be something that can, you know, fundamentally change the whole industry of consumer finance.
That is the Wisr story, ASX WZR. If you guys did enjoy it, don't forget to hit the thumbs up button. Feel free to share it out as well. If you're new, welcome. We make daily videos, so make sure you've subscribed and turn your bell notifications on. Anthony, it was an absolute pleasure to unpack the story. Exciting times up ahead, and I'm sure investors will continue to watch out for Wisr. Thank you so much for joining us.
Thanks, Matt. It's been great to be here.
Absolute pleasure. Talk soon.